All right, guys, welcome to October 5th's pre-recorded Zoom, and pretty much we'll be covering what happened after the previous Zoom from Friday. So first things first, with DXY, we know that our weekly was extremely bullish, right? Meaning that our monthly was bullish. Let me actually hide that. And our quarter was also very bullish, right? So now we are approaching a very, very interesting area, right? Even though we remained bullish, right? We technically have a 3-month inefficiency here. So any internal type of transitions will be optimal to continue a bearish bias, because even though we are technically bullish in even the medium term, right? I am still confident that we can see previous lows be taken out in the long run. Especially looking at this from a structure perspective, right? Where did the downtrend start? Up here. High, low, high, low, high, low, high, low, high, low. Unwillingness, break of structure. Break of structure solidifies the low being down here as the overall leg. So we are looking at a potential pullback, just because the low has been solidified. So right now it's not a matter of essentially trying to stay, like, how do I say this? Stay obsessed with that bearish bias, right? Because we know that internally we are bullish, and this is what we've been discussing the past couple of weeks, right? And as for targets, as for liquidity, because we've already taken out this previous POI, right, it makes all the sense to me that we should be coming back to meet this relatively soon. Right, so because that is the case, right, first thing that I am acknowledging here is a daily inefficiency, right? And I want to see what type of reaction will continue, because as you can see, based on, right, even intermediate structure or intraday structure, we are still bearish, and we have currently pretty much tapped a mitigation relatively around here, which was derived from our full H4 candle, right? This signifies the continuation of bearish order flow, and it will probably meet these relative equal lows, you know, relatively soon, maybe by tomorrow. So I do want to see what happens, right? Back down into this POI after we take liquidity, right? And I'm only referencing this because of the continuation of order flow. Is you can see a previous high, then you see the wick meet the high, and then you see this wick meet the previous wick, and this created the upside move to the upside. So if we see any any bullish transition, then I can anticipate now coming back up for previous highs. However, I need that transition because, as you know, we are taking out previous structure points. So if we are to come lower, this is considered picking a low from an internal standpoint, even though our overall is bullish, or our medium term is bullish. So yeah, it's a bit confusing, and let me explain why. Because I don't know if you guys remember, but we have covered before that after we meet, you know, very big targets, I typically like to stay away for a bit, just because I don't know how we will react. Why? Because we have just taken out a major point of liquidity. Oh, hold on. Okay, don't know what happened there. Sorry about that. My screen went black. Anyways, right, because we have seen our major liquidity point be taken out, right? I know our order flow is bearish. I know our structure is bearish. I know everything is bearish, at least until the medium term. However, taking a continuation here is a bit hard for me, right? Because we have taken that major liquidity point out. And as you've seen before, I don't remember the last time I spoke about that. I think it was in GU, but this is a while back. You know, essentially when we've taken out a previous structure point, yeah, I can't remember, is that we will see a reaction in the opposite direction, right? And it could either be a reversal or a pullback, and it could create an internal liquidity grab, external liquidity grab. That's why I typically like to stay away. I'm sure you guys remember about that though. So it's the same thing here, right? Although yesterday, right, we did have a good intraday trade, especially looking at this from an intraday perspective, right? We know that our intermediate leg, our immediate leg is bearish, right? And if we're looking at order flow, I see a push up that continues lower. Right, and if we zoom in, right, at this wick, right, you could see that this wick mitigated the inefficiency there, so that created a point of reference, right, point of reference via continuation of order flow. And internally, right, you know that in order to reach this POI internally, we must be bullish, right? So, right, first thing I notice is a potential turbulence point, right? However, as you can see, that is taken out, right? Meaning this is a continuation break of structure, right? However, we are still bullish, right? So as we continue, right, we know that this continuation BOS led to a bearish reaction, right? Bearish reaction led to unwillingness, right? And then broke through, meaning we are still bullish, right? Based on this immediate leg, right? So the immediate leg, right, now pushes up, creates potential liquidity, right? Because we are not technically mitigating anything, right? However, I will note that this did take out previous liquidity. So immediately after that, we meet the pullback, right? We have a solidified low because we take out the immediate structure there and there, right? So now once this occurs, we are now bearish in transition because this is now a sign of unwillingness because of the solidified high after we took out structure, right? Unwillingness based on the previous high. Yes, that is relative equal highs, but remember, liquidity is not an influencer of bias, only a target, right? So even though now you have relative equal lows here, I'm not focused on that. I'm focused on the immediate leg here, right? From a scalp perspective, right? And it doesn't matter if you would have wanted to take this or if you wanted to take this. Let me actually change the color. Right, either one is okay because the invalidation is here, right? So it's either you want to take that almost 4 pip stop or you would have waited for that 1.5. Right? However, this is a justified scenario, but like I said, it's very tough for me to want to trade, right? For one, I don't trade Mondays, but two, it's hard for me to trade after we've already taken out a major liquidity point being this green line. So now, even now today, as you can see, we have given a bullish reaction because this low has taken up preliminary structure, right? This is now unwillingness based on immediate leg, right? So now it's a bit tricky because we're in unwillingness, right? And I don't necessarily want to buy unless I get a very strong transition internally here, right? Because I know that's technically counter trend because no lower highs have been taken out, right? So you see how it's a bit conflicting from a swing trading perspective, not from an intraday perspective. From an intraday perspective, this is, excuse me, this is justified, and I'm pretty sure you could even justify something down here, right? But from a swing perspective, it is a lot harder to attempt to play here, right? Because I don't want to take too much risk as a swing trader, because you take more so risk as an intraday trader due to the volume of the amount of trades that you take. Coming into AU, this one's a bit interesting. Right, we'll do the same thing here. Weekly, right, relatively bullish. Monthly, right, relatively bearish. And our 3-month, right, being bearish. right? So internally, right, actually as a whole, we know we are bearish, right, even from the immediate leg, right? But this can now potentially start to become unwillingness if we take out the medium-term legs. As we dive in deeper, right, we know that we've been bearish on this for a pretty, a pretty long time. I believe since even we topped out up here. But although, right, we are still bearish now, we have tapped into a POI that we referenced before, right? And although we have liquidity still being potentially met, because internal structure was still bearish, right? It's important to note this, right? After the continuation that we noted here, right, we did come back into, or we did create a new lower low, and then we did meet a previous inefficiency. Previous inefficiency created a new lower low, meaning this is an internal leg, right? So this has now been broken, and this is now a solidified structural range, right? So now it's a bit tricky because, right, we have met, that deeper POI, right? And we have, created a reaction based on it, because if we dive in deeper, actually, let me zoom out a bit more. Okay, cool. We know, right, internally we have to be bullish in order to meet the POI, right? The POI led into, right, a higher low, right, based on this low. So this is low, high retracement. And then we meet unwillingness, break of structure, meaning this is now a bearish reaction, bearish transition. So because that is the case, right, I know now that because we've taken liquidity and we've taken out preliminary structure points, that this is now a potential liquidity grab into the upside, right? Especially here where we take out previous liquidity, take out immediate structure, right? And we create an internal structural range, right? Just to then have mitigation. Actually, let me mitigation, right? This now means, right, that bullish order flow is intact. Bullish order flow is strong because we have an interior turbulence point being mitigated once, mitigated twice, 2 mitigations leading into a higher high, strong order flow, right? So we know that we are short-term bullish, right? And this is fighting against, right, the bearish bias that we are mentioning as a whole overall up here, right? So our solidified points, right, are now showing us signs of bullishness, which only makes sense because we just finished the quarter and it is potential that we could see unwillingness, especially after the preliminary structure break. So the short-term move to the upside does make a lot of sense, but I do want to see what will happen, right, once we start meeting higher POIs, whether it be up here, whether it be up here, right? However, as you guys know, we do need bearish transitions in order to try to take anything bearish up here. Last one, GU, same situation as EU, because, right, we took a major point of liquidity and now you're seeing that bullish reaction come into place. However, right, something to note here, and something to note here, right, is that potentially, right, we can see our previous low still be met down here, right? The only difference now between DXY and GU that I'm seeing here is the fact that no lower high was ever broken, whereas DXY, lower high has been broken, right? So that's why I said, right, from a medium term, we are bullish still, at least for the medium term, right? I can't tell for the long term just yet, just because we just solidified our overall range. But with GU, right, I know where our leg is, right? And we are meeting a very interesting area up here very soon. So because we know internally we are bullish, right? Like I said, we need a bearish transition. Without the bearish transition, I cannot assume any type of continuation to the downside from an overall term, or medium term, sorry. Right, so with that being said, should be an interesting week. I want to see if we're going to actually push up in this bullish momentum with EU, AU, and then with GU, right, in case AU and EU fail that bullish bias, right, we could see a bearish transition and a bearish continuation, which is a very big trade. Even if we don't make that full transition, that is 258 pips, but even if we don't make that bearish transition here, right, your next target is easily almost 100 pips up. So it all really depends on how order flow reacts, how structure reacts internally, and then we pretty much make a decision based on that. All right, so with that being said, I will see you guys on Friday.